What's the financial story behind JPMorgan's recent performance? How have they navigated the recent market turbulence, and what does their future hold? Dive into the numbers, and you'll see a fascinating narrative unfold. In their last quarter, JPM missed both earnings per share and revenue projections. However, they're expecting to bounce back with higher earnings per share and revenue year over year. Looking at the fourth quarter financial highlights, the impact of First Republic is undeniably significant. The revenue contribution stood at a hefty $1.9 billion. With expenses at $890 million, the net income comes up to $647 million. Firm-wide results excluding First Republic are also compelling. Revenue rose by 7% year-on-year, totaling $38.1 billion. Net interest income excluding markets jumped by 11%, largely due to higher rates. Markets revenue increased by 2%. Expenses, however, ballooned to $23.6 billion, up 24% year-on-year, largely due to the FDIC special assessment and higher compensation. Credit costs came in at $2.6 billion, with net charge-offs of $2.2 billion and a net reserve build of $474 million. Let's shift gears and look at the full-year results. Net income reached a staggering $50 billion. Earnings per share came in at $16.23, and total revenue was a hefty $162 billion. Return on tangible common equity was a strong 21%. The balance sheet and capital story is equally impressive. The CET1 ratio was 15%, up 70 basis points from the previous quarter. This was influenced by net income, OCI gains, lower risk-weighted assets, and capital distributions. Examining each business segment reveals a robust performance across the board. In consumer and community banking, debit and credit card spending rose by 7% year-on-year. Net income was $4.4 billion on $17 billion revenue, up 8% year-on-year. The corporate and investment bank saw net income of $2.5 billion on $11 billion revenue, with investment banking revenue up 13% year-on-year. The commercial bank reported net income of $1.5 billion and revenue of $3.7 billion, up 7% year-on-year. Asset and wealth management reported a net income of $925 million and revenue of $4.7 billion, up 2% year-on-year. JPM's corporate overview reveals a net loss of $689 million. However, revenue was up $597 million year-on-year. Expenses unfortunately shot up significantly due to the FDIC special assessment, landing at $3.4 billion. Looking ahead to 2024, JPM expects net interest income excluding markets to be around $88 billion. Assumptions behind this prediction include rate cuts, modest deposit balance decrease, loan growth in card, and muted loan growth outside card. Expenses are expected to be about $90 billion, driven by business growth, revenue-related growth, and investments in technology and personnel. The 2024 card net charge-off rate is expected to be below 3.5%. In closing, JPM recognizes the record revenue and net income achieved in 2023. They acknowledge that they over-earned in 2023 with a return on tangible common equity 4% above their target. The outlook for 2024 suggests a movement towards normalization of returns amidst economic and geopolitical uncertainties. JPM remains committed to executing for shareholders, clients, and communities. For more information, the description is below to join a community of like-minded traders.
Arieous Invest. Trading reimagined.